Hello everybody, my name is Oleg and today we're going to go ahead and talk about my Roth IRA and my trading portfolio and why over the past couple of days I've been watching it drop about $500 a day. I will explain my justification, my emotions, my reactions to what the market is currently doing right now. We're going to also take a look at the technical analysis of some of the companies that I've been investing into, and I will explain my justification for why I'm going to be holding on to those companies over the next couple of days. Throughout watching this video, if you guys ever have any questions, just leave me a comment in the comment section below and I'll gladly look over it and respond to it within about 24 hours. At the very beginning of me recording this video, I actually noticed that I was down approximately $500 on the day. Right now it's about 542. We'll go ahead and refresh the page and we'll see how much I'm down. So it's 545. So the market still continues to go down. I'm going to go ahead and scroll down through all of the positions that I'm currently holding right now. And hopefully you guys will be able to pick up on some of these and you probably will be able to find a lot of those companies in your own portfolio. The ones that I'm the most interested in is American Waterworks, British Petroleum. I'm very interested in Disney and Waste Management. So let's go ahead and get down to the actual juice of why exactly I'm holding on to all these positions and I'm not selling right now. First, I would like us to take a look at my Thinkorswim platform and review DXD. DXD is a ticker symbol for an ETF. It's an inverse ETF from S&P 500. Depending on the goals that I have set for myself, I tend to day trade or swing trade this ETF. So let's go ahead and take a look at our RSI indicator. We can actually see that right now it's consolidating at the overbought side. So the first time when it was overbought and it was trading above the 73 level on the RSI, it ended up consolidating and it started going down all the way down to $21.47 a share. Right now, we are also indicated as being overbought. If we take a closer look, we'll be able to see that the price actually went above the 20-day SMA and it dipped down a couple of times. It consolidated at this level and then it ended up going down in the aftermarket hours. At this point, we can see that actually the price validated the 20-day SMA line and it broke through the resistance and it now uses it as a support. So it is currently bad news for me, but let's go ahead and take a look at VOO, which is the ticker symbol for the ETF for S&P 500. So right now you're looking at a 180-day chart of VOO. There are a couple of things that I want to point out here. The first one would be that the price of the stock actually has been trading above 180-day SMA line for the longest time. Right after the end of February, that's when the price ended up going below the support and ended up tumbling down all the way to $200 a share. So at this point, we have been able to see that approximately 50% of the market price has been recovered and it has been consolidating at the previous support. Do you see this? Right now it's trading at $258 a share. If you draw a support line all the way about 180 days back, we'll be able to see that this price has actually been validated multitude of different times in the previous half a year. So right now we are touching exactly the same price right here. And we'll be able to see whether the price is going to go down. And if it goes down, the next support we'll probably be able to see approximately this 180-day SMA. And if not, then we will be able to see that it actually potentially continues to go up because we have been able to see this continuous zigzag pattern. We have been able to see that the price would go up, then would go down, and then continuously would start trending up. Let's go ahead and take a look at the one-day intraday chart. Right now we can see that it's constantly validating that support line that we just drew. We see that it ended up validating it 3 different times and it seems like it's potentially going to go up based on the MACD indicator. But before we can actually get the full confirmation of the fact that the price is going to go up, is we would need to see that the price is trending above the intraday VWAP. Right now, the odds are actually playing against me. On the intraday chart, we can see that it creates this triangle pattern, and it's actually a downward triangle. So usually the price from here would go down from my experience. And I would not want to take unnecessary risk at this point. So what I would do is I would just wait up until it consolidates somewhere here at the end of the day. And if it doesn't get to that level, I'm just not going to take any positions. And so at this point, I would like us to take a look at 3 more different companies within my portfolio and see what the evaluation of those companies is going to look like over the next couple of days. And hopefully we will be able to predict where the price is going to go within the next couple of days. Obviously, it would be very hard to play against the strong selling market, but at this point, I would like us to take a look at some of the other companies within my portfolio. Hopefully, we'll be able to learn a little bit more about the evaluation of the companies that we have right now and make those decisions of selling or holding those companies within my portfolio. So right now we are looking at a 180-day chart of waste management. There are a couple of things that I want to point out here. So the first one is that we can definitely draw a strong support right about at this level. This is where the price was consolidating, and this is where it was trading in the middle of this, right? So we validated this price level multitude of different times, and we were able to recover from it and actually go higher. The second reason for me to actually purchase more shares and hold down to more shares of this company over the next couple of months at least is that I see that 180-day and 15-day SMA lines are actually getting very, very close to crossing each other. So when this happens, it's called a golden cross, which from my experience usually shows that it starts to trend up once we see that the blue line crosses the green line. So at this point, we can actually verify it right here. We see that the 15-day SMA line ended up crossing 180-day SMA line, and it continuously started going up, right? So we were able to see about 12% profit margin. But at the same time, we were able to see that the price, if it did not cross that, we would see how close it got right here, that it ended up validating it as a very, very strong resistance, and the price ended up going down about 8% of loss. So we're not going to be taking a risk on this one up until we actually see the confirmation that 15 days trading above 180-day, and then we'll take more positions. So at this point, I'm going to do the same exact thing. I'm going to just set up some alerts, and we'll move on to the next chart. The next stock that we're going to look at, I'm actually looking at it right now. I'm going to take a couple of positions because it's looking pretty good to me right now, so we'll go ahead and do that as well. So right now we're looking at a 180-day chart of Caterpillar. So Caterpillar has been around for a very long time. Actually did the evaluation of this company. We talked about the intrinsic value of this company in my previous videos. And right now, based on the technical analysis, we can see that right now it's trending above 180-day SMA line. So it has been acting as a support right here. So at this point, I'm going to take a couple of positions here because this has been acting as a very, very strong support. So as we can tell, it's been validating the support level multitude of different times. So we'll go ahead and buy a couple of shares of this company. We're going to go ahead and buy about 10 shares of this company, confirm. It's going to be approximately $1,100. And send. So perfect. So we just got filled in this position, and we are down 19 cents, 74 cents. So it seems like it's going down right now, but we're going to take a chance on this, and we're also going to create some alerts on this, and we're going to price it below, and we're also going to put it right here, slightly above it, and we'll do the follow-up on this company most likely tomorrow. And we're going to go ahead and look at the very last company right now, and then we are going to wrap this up. So right now I'm looking at Disney, and I'm getting a little bit excited because I see a couple of things that I have not actually pointed out in my previous stock evaluations. So we're going to go ahead and talk about those real quick right now. So we are looking at Disney, 180-day SMA line, and their first thing that I want to point out to you guys is that you see this channel right here, right? When we saw the huge volatility in the market, and we were able to see that the market has actually dropped the price of this particular stock all the way to $79, it actually dropped and double bottomed right here, right? So validated its very strong support. Ever since then, it has been building this channel of going up, right? And so for us, what we want to see is we would want to see the rebound, right? We would want to see that this channel gets validated again. And so there are two things that I think are very, very important here. We can actually see the 15-day SMA line is actually trending above 180, and it has been validating it as a very strong support previously. Current setup actually reminds me of two different things that potentially can happen on this market. So in this case, we see that the current price is trending above 180-day SMA line that previously acted as a resistance multitude of different times, and then it acted as a support, right? So once we break through the support, then we go down and we start tumbling. Once we broke above the resistance, we validated it as a support, and then we saw this golden cross right here, and we were able to go up in price. So in this case, I see that we can potentially validate this channel just like we drew it at the beginning, and it can potentially start going up. We have about 12%, 12.5% margin of profit, and we have just about 1.5% margin of loss. So we can set up our stop losses right about here. And the last thing is that it can potentially start breaking through this and we'll need to see whether it's going to validate 180-day SMA line as a resistance or a support. According to the first indicator of the RSI, we are not able to see that the price is actually overvalued or undervalued. It's trending somewhere in between, so it's actually, according to this, it's fairly priced. Then the next MACD indicator actually shows us that it's in a downward trend, and we do not see a lot of consolidation. We don't see a lot of reversal right now. We would want to wait for the confirmation and then see whether we want to take any positions, or we would want to just wait. So at this point, I'm not going to take any positions on the company. I'm going to set up my stop losses. I'm going to set up my alerts, and I'm going to do the follow-up with the next couple of days just to see whether the company is worth buying into right now, or if it's worth just waiting and seeing the full confirmation of the reversal pattern. As a last resort, let's go ahead and look at my account and see how much further we have dropped in the stock market. I'm currently looking at my account and I'm still down $506 on the day. While the markets are slightly recovering, it doesn't necessarily mean that they're going to continuously go up, and I'm not going to feed myself with the ideas that, oh, tomorrow I'm going to wake up and I'm going to make all this money back. Usually it doesn't work that way. While it's still extremely devastating for me to go look at my account and being $500 or $600 down on the day, I have days like this. So $1,300 on the day. And I'm not showing you this to you guys to brag. I'm trying to show you that sometimes it is worth holding on to your own ideas, to your own technical analysis, or to your own evaluations of the intrinsic value of the companies, and then making your own decision to whether you're going to withstand the storm that is happening on the market, or you're going to get out completely and potentially miss out on the profits of the recovery on the market. Again, thank you for watching, and I hope I'll see you in the next video.